The Magnificent Seven stocks continue to lead the market in 2023. They've had a great run in 2023, but that run is fading. If you look at the last 30 days, I think you'd be interested in seeing which stocks are fading. Earnings were all reported by these companies. Some earnings were better than others, and I'm going to track that and share that with you in today's video. My name is Victor. I have an MBA, a lot of business experience, and I like analyzing companies before I invest in them. I like tracking the Magnificent Seven because they're so important to the overall market, and it really tells you where the market's going and where the economy's going, frankly. Before I jump into covering these companies, do me a big favor and like this video and subscribe to my channel. You can see a lot more videos like this. If you subscribe to the channel, you'll be reminded when I produce a new one. Now let's get to the Magnificent Seven. So the Magnificent Seven have a combined value of $10.79 trillion, and that makes up 29% of the 500 companies that are in the S&P index. Those 7 companies are 29%. That's pretty incredible. The whole S&P is worth $37.16 trillion. The stock with the biggest market cap is Apple. $2.78 trillion is the market cap for Apple as of today. Year to date, it's up 42%. So it's had a very good year. But more recently, it's had a pretty good pullback. If you look at just in August, it's roughly 2 weeks, it's down 9.5%. Reason for that is their earnings showed that the overall revenue did go down, and the prospects of the company growing, there's just nothing out there that's going to show that Apple's going to grow. So it's going to be a steady state company, maybe see some further declining in revenue. And that is worrying investors, especially when you have such a big market cap. Apple does pay a small dividend, which might be nice for investors. But I think that was the problem with the Apple stock that caused that 10% pullback. The company with the second largest market cap is Microsoft, and again, it's had a very good run, 34%. It is beating the S&P index. Now, this is the stock that was really had a big run up because of artificial intelligence, the AI craze, and they deserve some of that credit. I think they're doing a lot of interesting things with generative AI. As you know, they have use cases. They already came out with a product that they're going to start selling to their customers. So that's really interesting. But I think it was overdone. And when they announced their earnings, they were solid earnings, but they weren't like incredible earnings. So you've seen the stock pull back 10% in the last month. So that's understandable. The market, the valuation of this company is so high that it's really priced beyond perfection, in my opinion. So a pullback is natural in the Microsoft stock. Alphabet has a $1.64 trillion market cap. It's up 45%. And this stock, if you look at their return year to date, it was kind of being left behind the other Magnificent Seven, but it's now beginning to catch up, principally because they had a very good earnings report. They really did show better profitability, better free cash flow, and the company really had a nice last month. So very good year, very good last month. And there might be more room for that stock to run. We'll see, but they've had a very good last 30 days and they're having a good year. Next on the list is Amazon with a market cap of $1.43 trillion. Year to date, they're having a phenomenal year at 61% year to date return. But in the last 30 days, they've also had a very good return of 3.5%. And that is because their earnings really were well received. The profitability from Amazon really impressed. I think the new CEO had some cost cutting, some very good efficiency ideas, and their profitability went really sky high. In one day, the stock went up 11%. On a market cap this big, for a stock to move that fast was pretty incredible. So Amazon's doing a lot of good things. Nvidia is next on the list, and it has a $1.01 trillion market cap. This is a phenomenal company that makes semiconductors and GPUs that are powering a lot of things. Principally artificial intelligence. They're supposed to be the compute and the technology and infrastructure company that really powers AI. And I believe that. I just think that it was overdone. When you look at AI, there's no real business case in 2023. I haven't heard of one that's going to be going to market in 24. Maybe in 25, we're going to start seeing it. So I think it's overdone. And I think Nvidia should be selling at a premium because they're going to be a good big player in AI. But in the last month, the stock has pulled back 14%. So it supports my theory that, it was the AI hype overpriced Nvidia in the short term. Is the stock price going to continue to drop? I don't know. My guess is that it will continue to drop because it was overdone, in a big way. And I think as we have a couple earnings, a couple quarters of earnings, and Nvidia can't show that incredible kind of revenue growth and profitability and free cash flow, I think the stock's going to continue to either go sideways or go down more long term. Meta, they have a market cap of basically $776 billion, which is incredible. And they're having a very good year at 142%. They also had a very good earnings report, but it's still, the stock is down 2.3% over the last month. And I think it's an opportunity. I think Meta is doing a lot of things right. They have a lot of good ideas. For example, the whole AI craze, they didn't benefit in a big way, but they are one of the big players in AI. They have a tremendous amount of data. They have 6 billion users globally. So that piece could be quite big for them. Their earnings were very good. It shows that their advertising revenue is still incredible. And they have a couple of ideas, in the pipeline that could really expand the company, grow their revenues, and expand their profitability. So I'm looking for Meta to possibly go up in value over the course of 2023, going into 2024. And the last company in these magnificent 7 companies is Tesla. Incredible company that continues to just amaze. For a car company to be doing what they're doing is quite incredible. And they're having a great 2023 year with the stock going up 124%. But over the last month, you've seen it really fade. It's down 17% over the last month. And I think some reality is beginning to hit investors that, producing cars, it's an industry that's been around over 100 years. You got some pretty good competitors in that space that really know the space. And I think the big change is that the consumer, there's a lot of kind of early adopters, people that really are kind of geeky, for lack of a better term, and they want to own an electric car, and that's great. Knock yourself out. But I think the general consumer is just in need of a transportation, and gas-powered cars are still a really good option for these people. There's also the dynamic of a lot of young people just don't want to own a car. They'd rather just hail an Uber, take the subway and things like that, and it really reduces their expenses. So I think the EV market is beginning to slow down. At the same time, you have a lot of new competition. So that's kind of a dynamic that I think is going to always hold this stock down. Again, I have tremendous respect for Tesla. I think they're awesome. It's just the market, the industry is not my favorite industry to invest in. So where's the market at? Is it greedy right now? Everybody's buying just to buy, or is it fearful? Everybody's selling their stocks. Well, I think last time I covered the video, I thought the market was somewhere in this zone. Everything was kind of going up. There was disregard to valuations. AI was a big craze. Oh man, AI is going to do everything. And I think we're past that, or we're in a different, headspace for the market. I think there is some fear in the market right now where there's like, hey, maybe AI isn't ready. Maybe there's not a whole lot of revenue coming from AI in the next couple of years. There's been some other fears that have entered the market. It's great that we're having an awesome, appreciating year for stocks, but I think there is some fear. I think there's some institutional investors taking profits. There's investors taking profits. I took profits in the last 30 days, and I'm glad I did so. Taking some money off the table is a good idea. I made the right calls, made the right investments. Now let me lock in some of those gains, and I'm glad I did so. So we're in a different space. I think we're kind of, we have some fear in the market, which is good. That way valuations now really do matter. Data really does matter. Looking at companies, um, you know, for what they're going to produce in the form of free cash flows, profits, growth. Those principles really do matter. They're always in style, but I think now they're becoming more important. And I think that's where we're at in the whole psychology of the market. So taking a look at this market, I happen to believe we're in a full bull market, and we're seeing a pullback recently, but we're having a really good year. The S&P is up 16.73% year to date. Very good year to date. If I annualize that figure, we get to a 26.8% annualized return. And that's where I think we're going to end up there for 2023, give or take 3%. We might be down to 23%. We might be a little higher, like 28%. But I think that's where we're going to end up. We've had a pullback in the last 2 weeks. Just in August, the S&P is down 2.72%, which is good. I think it's an orderly pullback. I'm glad that's happening because the euphoria kind of period of a month ago was just, a little out of control. So now having this pullback, I think it causes investors to really to investigate their investments, look at fundamentals, do research. Numbers do matter. Do valuations, really invest based on principles. That's a really good idea. If you look at the return, if I annualize it again at 26%, we've had 7 years where the returns have actually been better than that in the last 29 years of history. So more than 20% of the time, we've had years that were actually better than 26%. So to me, it seems possible. It seems possible to hit that 26% annualized return. And a good reason for it is that 2022 was a down year. So at the beginning of 2023, stock prices were low, and now they're regaining some of the losses they had. I thought the sell-off last year was a little overdone, so we kind of caught up on some of that. And then naturally, some of these companies really do deserve these valuations, and these cash flows are really looking good, especially for the Magnificent Seven stocks. They just are very healthy, high cash producing companies, growing companies, profitable companies. The factors that are going to cause the Magnificent Seven stocks to go up or down, first, these earnings reports, they were good earnings reports for the most part. I thought that Google, Alphabet had really good earnings report. Amazon had a phenomenal earnings report. So that's really good to see. My worry, going into earnings season was that it was going to be hard for these companies to really put up, impressive numbers. But I think they're pulling it off. I think the earnings reports are really good. If they continue to show that type of, growth and profitability in Q3's numbers, I think that's going to push the market higher, and the Magnificent Seven stocks will go up in value. We are beginning to expect a soft landing recession. And when we expect a soft landing, I think that's going to help the Magnificent Seven stocks. Low inflation, lower interest rates is also going to help the Magnificent Seven, so that we get rid of this high inflation, some of this drag, and especially these high interest rates. The interest rates have really gone up. My expectations that interest rates will not go up much higher. Chances are they're going to begin to go down in the latter half of 2023. Now, what could cause the Magnificent Seven stocks to go down in value is if we begin to hear that it's going to be a hard landing recession. So if we get data, in this past week, we saw that the consumer price index actually showed that inflation was going down, but the producer price index, which is what companies pay for products, that number went up. So there was kind of a mixed data set. In general, I thought it was good news for a recession, for inflation. I think that prices are going down for the consumer. And to me, it hints at I'm expecting a soft landing. But if we continue to see data that says, no, we're going to have a hard landing, that's going to really drag down the prices of the Magnificent Seven stocks. Institutional investors can really drag down prices too. If institutional investors, take profits because they own a lot of these shares. That could drag down prices. And higher interest rates continue to pull money away from stocks. Bonds are really paying a high interest rate, and it's quite attractive to take some of your gains and move them over to bonds and start, earning 10% in a less volatile investment. That's a Magnificent Seven stocks. These stocks are really leading the market, just doing an incredible, job for their stockholders and increasing value and delivering value to those stockholders. I encourage you to analyze these companies. You'll learn a tremendous amount by really studying these companies and understanding how they put their businesses together. I really like analyzing these companies, to invest in several of these. But also, as I look at smaller companies, I could see if I'm finding a small company that's really on the path to becoming one of these trillion-dollar value companies, and I invest in those. So I think it's just a very good exercise for an individual investor, a value investor, to look at these companies and really study how they became this valuable. Keep in mind, I'm not recommending you buy or sell any of these stocks. I'm sharing my experience as an individual investor, how I go about analyzing companies. I hope you found it interesting and learned something from this video. Do me a big favor and like the video. Put in some comments. Let me know which one is your favorite, Magnificent Seven stock, which one you think is going to drop in value. It'd be really interesting to hear your comments on that. And become a subscriber of my channel. You'll hear, updates on new videos that come out, and it'd be great to have you as a community member. So with that, good luck investing in 2023.